Gold has been stuck in a very tight range lately, and with the highly anticipated Fed meeting around the corner, could this be the catalyst that finally breaks the deadlock? In the next 3 minutes, let's run through the key points of the meeting itself, market expectations, and how gold might react. Quick recap of gold's recent moves. While I say calling it a dead calm isn't far off. Over the past week, prices have basically hovered between $41.80 and $42.50. The uptrend from late October hasn't been broken, but buying momentum is limited and bulls and bears are still cautiously eyeing each other. On the upside, $42.50 is the key resistance. If gold manages a clean breakout with strong volume, bullish momentum could reignite, pushing prices toward $4,300 and maybe even testing the all-time high of $43.81. On the downside, a drop below $41.80 could shift attention to the support zone formed by the late October uptrend and 50-day moving average. This area could see technical buying step in. Well, for traders, the biggest wildcard right now is obviously the Fed meeting. The market has already priced in a 25 basis point rate cut, so the real focus isn't cut or not, but what Powell says and the signals he gives about the future path of rate. The mainstream scenario right now would be the Fed cut rate, 2026 unemployment forecast tick up slightly, and Powell acknowledges internal divisions using hawkish language despite the cut, highlighting that inflation rates aren't gone and implying that the bar for further easing is now higher. In this case, the sell the fact reaction and expectation that rates stay steady for a while could trigger short-term profit taking, putting some downward pressure on gold. I mean, of course, if Powell somehow turns dovish in his speech, that would be a major surprise, likely sending gold sharply higher, but that scenario has a very low probability, I think. As for the actual voting split on the chart, we'll only see that in a minute at the end of December. If it shows deeper divisions, the increased uncertainty about future policy could provide some modest support for gold as a hedge against policy risk. So from a market expectation perspective, it seems more likely that gold could feel a bit of short-term pressure from this Fed meeting. But given the strong medium to long-term bullish sentiment, any pullback could be a potential buying opportunity. After the meeting, attention will quickly turn to November's US non-farm payrolls and CPI data, especially the former, because recent employment signals are actually a bit mixed. So these two data points will give the data-dependent Fed fresh clues and could trigger the next wave of volatility in gold. So, how would you trade this Fed meeting? Do you think gold could finally break out of this current range? Drop your thoughts in the comments.